The number one reason to lose in the market is not being consistent with following one strategy for a longer period of time. The objective behind me making this video is to give you guys a trading strategy that works in market every single day. So if you're new to this channel and watching this video for the first time, complete the theoretical part ahead. Others can skip to section to start with the analysis. Before you execute any trade or do any analysis, you have to wait for a fresh support and resistance to be formed in the market. When you have a bearish engulfing pattern, which is also called as market maker sell model, that time we have top of the range, which is also called as resistance in the market. When we have market maker buy model, which is also represented as bullish engulfing pattern, we have bottom of the range, which is also called as support. And when we combine a market maker sell model and a market maker buy model together, we have top of a range, bottom of a range, means a range is formed in the market. So basically, range is our friend. And your job as a trader is to identify a clear range in the market. On 25th February, on 15 minutes chart, we can see a bearish engulfing pattern combined with another bearish engulfing pattern. Means we have multiple engulfing patterns. So at this point, we will not do anything else and simply shift to 30 minutes chart to identify a clear range. Now, when we come to 30 minutes chart, we can see one market maker sell model, but we need a bullish engulfing pattern, a market maker buy model for a range to form. And that is the reason we have to wait before doing any analysis. So now, when the next candle closes, we have a market maker sell model, a market maker buy model, a bullish candle breaking a bearish candle high, creating us a top of a range and a bottom of a range. We have a range formation. Step 2 of this analysis is to go to 3 minutes chart and look for entry. But for this example, we are going to use a 1 minute chart for our analysis. Now, we have to draw a fibs from top to bottom to identify the direction of the trade. So now, because we are in discount zone, we will be looking for bullish trades. At this point, you can see price has come deeper side of a discount zone. At this point, we have a low, a high, a lower low, and a higher high, bullish breaker formation. But to enter in this trade, we have to wait for a 50% retracement. And as you guys can see, before we had our 50% retracement, price has broken the range on the proper side. That means if the range gets broken before we enter our trade, then the analysis which we have done till this point becomes invalid. So in this example, you have learned about the valid range and the invalid range. So what do? We again come to 15 minutes chart, identify a clear range, and that is how we start our analysis from beginning. So now when we come to 15 minutes chart, we have a bullish engulfing pattern. We are waiting for a bearish engulfing pattern. At this point, we have a bullish engulfing pattern and a bearish engulfing pattern. When this candle close, our analysis starts from 15. We draw fibs from top to bottom and identify the direction of our trade. Now, because we are in a discount zone, we are going to look for a bullish breaker and to enter a bullish trade. So at this point, we have a low, a high, a lower low, and a higher high, a bullish breaker. We are going to look for a 50% retracement. We are going to enter our trade. We are going to enter our trade at a 50% retracement. Stop loss is going to be below the breaker and the target is going to be the high of the range. And once we get our entry, we have to wait for either of them to get achieved, either a stop loss, either the target. And let us see what price has done. So in this case, we can see we have hit our stop loss. So what we do? Does our analysis gets invalid? No. Just because we are in a discount zone and the range is still intact, still valid, we can look for re-entry in this trade. and we have to wait for a new bullish breaker to form. Low, high, lower low, higher high, a new bullish breaker, a 50% retracement on that bullish breaker, a entry at the 50% retracement, stop loss goes to bottom of the range and target goes to high of the range. And once you have entered the trade, let the trade play out by itself. And as you guys can see, the price has started moving in our direction. Hope after watching this video, you guys have learned how to follow a simple strategy that works in the market every single day. And if you guys want to learn this strategy from me personally at a deeper level, you can contact me on my Telegram and let me help you guys in your trading journey. Thank you guys. See you in the next video.